Good morning, everybody, and welcome to Serene Education for the 4 majors for the 5th of November 2012. Hi, guys. Hope you had a fantastic weekend. Hope you had a fantastic Halloween if you had an extended Halloween this weekend. And let's have a look and see what happened after Friday's non-farm payroll figures. Let's have a look. Okay, that's the daily. Let's have a look at the weekly. Bearish engulfing. So I take it that we had a very negative week last week. Price not making any higher highs. And we had a bit of a consolidation during the course of the week, but you can quite clearly see that from the lows that we saw here in the latter part of July, we went to make on a high around the 1500 price, fell to maintain those highs, and you can see price pretty much playing with the 23.6, but you can see quite clearly prior to last week's close, we had price spending 2 further weeks above the 23.6. And ideally, if that was to maintain upside favoritism, then we need to see a nice bullish engulfing candle pushing higher, breaking above the 1500, and then heading up towards that all-important second target, which will take us back towards the institution. Would have been roughly around here 13400. That failed to materialize, as we can quite clearly see that price closed lower last week. And let's have a look at the chart, the daily chart, to give us an idea of what happened. We can see at 1500 price rallying into these areas. Evening star, not too far long ago, the earlier part of September, little bearish engulfing, or little harami here, bearish harami, as we head into the 1500 yet again on a second attempt. That failed to materialize, and then price just reverted to the downside. Friday closing lower, particularly because of the fact that non-farm payroll figures came out very positive for the US market. 173,000 jobs were created. They're expecting less. However, that figure came out nice and high. And sure enough, pushing the euro, the sterling, or any pairs against the US dollar down, and the US dollar pairs rallying against most of its counterparts. So pushing quite a negative candle. If you look at the overall trend or the candle height or range for each candle, you can see quite small compared to this one. A lot of momentum to the downside in doing so, really pushing. That's 50, and that's 100, just about 120 odd pips to the downside. So quite a nice engulfing candle. And in doing so, breaking this little, if you want to call it, this little support here. You can see the lows are getting higher as we still traded above the institution moving average. You can quite clearly see here the 200 period moving average. So we were looking for price to potentially look for another higher. However, a candle not too long ago, back on the Wednesday here, showing a lot of negativity, very indecisive doji. More price action at the lower end of the wick, so closing lower on the 50% side, and the Thursday candle coming out very indecisive yet again after that indecision, very spinning top. So we still wanted to see another decision candle, and Friday's close pretty much telling us that price is looking lower. However, trading and closing into the institution moving average, and on the Asian session last night, price is now trading just slightly below it, very indecisive. You can see not very much wick. Not much body, a lot of wick, and you can see price really at the moment now really trading at the underside, or trading at the lower end of that range. A very small range, but at the underside of that range nonetheless, and it's all taking place below the institution moving average. We would need to see something. We would need to see price trading below or closing lower than the institution moving average to see everything looking bearish. But as you can quite clearly see here, the institution moving average clearly acting as support up until recently. And that support, if this continues to be the outlook for today's trading session, price moving lower, then we can see that support being broken for the first time in 2 months, and that's not a good sign. Histogram still showing us blue on either side, but you remember this this actual template very lagging in such. So if you're looking for intraday or shorter term sentiment, is looking negative at the moment. Now we have 2 parts to our overall strategy template. For in favor, we have a red arrow and the red candle. The CTC, the actual trend or sentiment, is still looking positive at the moment. Ideally, we'd like to see that institution moving average being broken, and then we should see both the histograms on our side actually marrying up with price sentiment actually falls lower. So hang on, let's have a look and see what's happening. Ideally, you want to see a close below this institution moving average. If we do see that, then ultimately for the foreseeable future, price is going to look very, very negative indeed. So we take the low here that we had in July, and we take it all the way up to the current high that we've seen recently here at roughly the 1500 mark. You can quite clearly see the 23.6 has been broken, the institution. So we find price finding resistance now at the underside of this institution moving average, Near term, we should be looking at 1275 as our first target towards that 38.2 fib retracement area. Break below that, then down to obviously the 50, which will take us to roughly around the consolidation here. We saw the breakout here at 1260, and then back towards 61.8, which is at the underside of this consolidated range here at the 1245 and change. And if you want to plot the 78.6 mark, put that in quickly. We'll trigger, and there we go. That takes it back to a little consolidation range here, roughly just below the 12,300 mark. So we have viable targets as long as price actually closes lower than this major support and resistance level here on our daily. For our chart is showing that price over the past couple of hours or so has been finding resistance at the underside of the 1283, which happens to be our institution moving average on our daily. See the breakout, yes, so the pullback over the start of last night's session on the Asian, and you can see now price is selling into or away from that resistance level now, 1283, which is our daily institution moving average. So as long as the price stays below this area here, we should remain or continue to see price moving to the downside towards our next target, which would be down here just roughly the underside of 1274 as our first target. Second target below that 12600, etc. to the downside. So histogram remains red across the board. We're making lower highs, which indicates that price is falling. We are trading below all the moving average, including the institution moving average. And most importantly, our CTC template is telling us we should be selling. So we should see red arrow, red candles, and the histogram on our side red, and we are trading below a major support and resistance level near term. So ideally, you want to see the 4-hour closing low. A nice bearish engulfing candle would confirm that, and then we should be looking for those first targets to the downside. On to sterling. Let's have a look and see what happened on the weekly. Here again, we had a nice bullish engulfing candle 2 weeks ago, and last week's candle pretty much taking it all back again. And you can see price actually closing at 1600, which happens to be that psychological round number here near term. So you can see a lot of hesitation here as price has pulled back since early September or mid-September after this evening start, as price failed to rally above 16300, which happened to be our major support and resistance level high. And you can see a lot of support through here. Price trading into it but bouncing higher, then price trading into it and remaining higher. This one trading lower, moving higher. Bullish engulfing. We'd like to see price moving higher. Start of last week, price did exactly that, move higher. However, through the latter parts of last week, going into the close on Friday with non-farm payroll, etc., price has just taken all back, and she's fallen again as the US dollar has pulled some really fantastic figures out the bag, and it's seen the sterling dropping. We have seen also some very positive figures for sterling nonetheless. However, sterling is still heavily tied with euro, and as long as European has some really bad figures, then ultimately you can see that's going to pull back. So moving back towards the 1600, it is closed above 1600, and you can quickly see the 1600 psychological round number, as I mentioned earlier, and traders will be well aware of that. So as long as she still continues to trade above 1600, then we likely see price continue to build on that. Even though we had a negative candle, we'd like to, as long as it maintains above here, then we could see price continue to build. However, if she gets lower than the 1600 and closes lower than 1600, then ultimately we should still be looking for bearish sentiment to remain in favor, and we should see prices reverting to the downside. Our long-term target, if that had to be the case, would be to see price moving towards that 15,300, because on our weekly, that happens to be a major support area for price over a number of years. We're going back to 2010 here, guys. You can quickly see through 2011, a lot of support, okay? So if we saw failure here at 1600, then the likelihood of her or price moving down to these areas here is quite likely, because you can see each time she's broken below the 1600, she's really fallen quite sharply to the downside. Notice we here just recently in May, another one of August last year in particular, another one here in November. You can see that once she's broken out psychologically, she's just let go of herself, and she's really rallied to the downside. So we did see a break below 1600. We could see a rapid decline towards that 15,300 mark below price, or below this current support. So the actual template itself on our weekly is still telling us we should be looking for positive sentiment, but as I said, this is a lagging indicator. We would have to look at our small time frames to see exactly what price is doing. You can see here on our daily, for example, histogram on our side still remaining positive, because we're still trading above the institution moving average. However, you can see near term 16,300 still remains a major resistance level, and as price has fallen lower, and each attempt she's made to bounce, those bounces have been a lot smaller than the prior bounce. Okay, so you can see here, move higher, then the fall, then the fall, then the fall, then the fall. Recently, 1500 has been a major obstacle for price as she's found support here at 1600 and bounced higher. A lot of indecision candles, bearish engulfing here, an evening star here, another evening star here, a nice perfect evening star here, and prices reverted back towards the 1600. However, each time she's moved into the 1600, bar this breakout here, she's managed to pull herself straight, and then she's managed to move higher. So if you are looking to trade this long term, we would need, or it would be far better to bide your time, give today away to the market, and get a clear, definite indication from price what she's likely to do over the foreseeable week. Because if she finds support here, there's more likely her to bounce higher. And if she does form an indecision candle, like we've seen in the past, then we've got to wait for the decisive candle, and then we'll trade that decision. So here, for example, nice morning star, indecision to bullish engulfing after bearish sentiment would indicate intraday we should look for buying sentiment come through, and sure enough, we had a move to the upside. Here, this indecision followed by the decision, and that decisive candle moving into a price support and resistance level breakout at 5900 would have had to wait for the break to close lower than 5900 in order for us to see any further downside movement. That failed to materialize, so price moved back up against the trend, and we saw price moving high again. Here again, we do need to see that decision. So rather be careful, bide your time, wait for price to close either side of that to give us an indication, or our decisive candle, and then we'll trade that decision. Yeah, just moving into the 4-hour chart, you can see near term, you can see that I've made that 1600 nice and bold, so you can see quite clearly what price has been doing. You can see each time price moved into the 1600, you can see we've started to see a lot of indecisive candles, a lot of hesitant candles, a lot of wick on either side, confirming that. You can see now we've seen the last 4 hours now selling into this major support and resistance level, psychological support and resistance level at 1600. We want to see that being brokered now. So we want to see a nice bearish engulfing candle below that. Then we'll look for the pullback, obviously, to see if you can actually minimize your risk, and then we'll get to look for a trade to the downside. Histogram on here is looking negative on the other side. We've got everything in our favor, all the moving averages above price, and most importantly, we have sentiment in our favor. The only thing that's going to be in the way, or the barrier at the moment now, is that 1600 mark. Get below that, and then we're going to see that volume move to the downside, and we can look at potentially our first target here at 15,900 being back on the table for the foreseeable future. On to US dollar Swiss franc. Let's have a look over here. For the past, what do we make this? 3 months, we've seen price consolidating now in this consolidated range. Not really moving any lower, not moving any higher. However, Friday's momentum has now started to potentially forge out a nice support area as price has now broken the upside of this consolidated range. The one thing to note here is you can see our histogram on the other side has gone blue, and our weekly candle is starting to look positive. However, we do not have a blue arrow in this. Okay, you can see a red arrow. So just be aware of that on our weekly. So what we're going to do is just move down to a daily chart and have a look and see what price is doing near term. So you can see 940 here over a period of September, finding a lot of resistance, and that 940 now also is the institution moving average above price. As you can quite clearly see, that price is now trading below the institution moving average for the first time since September of last year, October of last year. And now for the first time now we've seen price, September of this year, trading below that. And we thought, well, as long as price remains below that, then ultimately price is going to now head to the downside. That's not been the case, as the US dollar has rallied now against most of its counterparts out there after last week's announcement of non-farm payroll, and that has now pushed it back up. And you can see just near term, you see price making higher highs, so which is a good sign. And doing so, Friday's kind of moving up into that 940 range, and then this morning on the Asian session, price is now taking it higher. So taking it higher than 940, as long as it maintains now above 940 for the remainder of this week, then we should be targeting the near-term resistance levels to the upside as target 1, 2, and 3, which is our February tracement. So I've taken the all-time high that we saw in July of this year to the low that we had just currently here at 920, and 23.6, the 38, the 50, the 61 have all been plotted on here, and you can quite clearly see that would be our next target. 950 would be a nice our next target to the upside, as long as price remains above that all-important 950 mark. I've also put in the, let me just see if I can just put in the 78.6 here, which is also another February tracement, and that's taking us to this price swing high here at 980. So here, the first target 950, second target 960, Third target below the 970 here, which will take us back to price support and resistance levels here. Nice consolidation, support and resistance just below the 970. And then that last one here at the 78.6, which is above the 980 before we see price moving all the way back up and reattempting that all-important 1,000 mark, which is what's price ready to in the long term of this year, which is our major long-term target for price on this particular pair. So as it stands now, just remember for the remainder of this week, if price remains above 940, then we should be looking for nothing more than intraday buying opportunities, and these targets to the upside, as I mentioned, would be our first port of call. Last pair of the day is US dollar Japanese yen, and this pair has been positive the past couple of it has been consolidative since June of this year at the 7800 mark. You can quite clearly see the price on our weekly chart has remained consolidative between 78 and the 80 near term, but just recently we've seen US dollar gaining a lot of strength against its Japanese counterpart, the yen, and sure enough, we had that all-important non-farm payroll figures that came out quite positive for the US market last week, and that has subsequently pushed price higher. Here we go, this is the daily chart. Thursday, we saw price moving higher after that ADP employment figures on Thursday. That's now pushed it, and then non-farm payroll figures has also been positive, and that's now pushed price higher above the 80. 80 being a major support and resistance level near term. We've had one or two breakouts, but sentiment, as you can quite clearly see, hasn't taken that and moved it higher. It's just pulled it back. And these all ultimately just constituted to fake outs in the market, and prices reverted to the downside. Now it's imperative that price now remains above 80. As long as price remains above 80, a major support and resistance level, then ultimately price is going to build on that, and then we should be seeing price moving higher over the next couple of months. We'll take the 8400 mark as our this year as our major high. To the lows you've seen currently this year, just below the 77, just above 77, and you can quite clearly see the 23.6 here being broken, the 38.2 being breached, price heading into that 50% line now near term, and coming unstuck. You can see quite a slight pullback after the US session close on Friday, and further selling for the US dollar going into the Monday open of the European session. So as I mentioned, as long as she maintains above the 80, then we should be looking for price to continue that momentum. What we can do though is to see if price can actually now stick to the high side here, ideally above the consolidation that we saw just recently. If we can maintain above this level here at 80, the 8300 mark, then we could see price just taking a bit of a breather before we see price reattempting these highs here just near term that we saw on Friday evening at the 80.67 mark. So if you can stay here above 80.30 going into the US session, then we could see price moving higher for the remainder of this day. If not, we could see price putting all the way back again. As long as she maintains above 80, then it should still constitute to positiveness. You can see the institution moving, or all the moving averages below price, including the most important institution moving average. And as long as she's price trading above the institution, then it's looking positive. You can see the histograms on either side on our daily, all blue, including the momentum now is telling us that we should be looking upside favor. So profit taking near term, as long as she takes a small profit take or pull back, then we should see price making a reattempt of those highs near term. So intraday, there's the 80. I marked it out nice and clearly. You can see the histogram has remained nice and blue throughout this move to the upside. You can see price actually really moving higher. All the moving averages nice and evenly spaced out, telling us that there's genuine momentum in this trade to the upside. It's imperative now that price actually now maintains these highs now above 80 and builds on that. If you can build on that momentum break to the upside above 80, then we're going to see price continue to move for the foreseeable future to that 8400, which happens to be our major support and resistance level high that we saw on our daily and weeklies for this year, the 2012 highs at 8400. So imperative that price maintains above this 80 mark for the foreseeable future. If not, if she gets back below 80 again, then we're seeing very indecisive markets, very topsy-turvy, and then we should be looking for near-term resistance yet again and for further bearishness to the downside. However, as long as she maintains above 80, we should be looking for nothing more than buying sentiments. Okay, that's it for today, guys. Hope you have a fantastic trading day. Please make a note to see if there's any news out there that's going to actually help with a bit of what the volatility that we've got known to see in currencies. But yeah, just be aware of that, and then just factor that into your trading. Okay, guys, back it up with some money management and keep it simple. One of you, the guys out there that make the trading very, very complicated, are the ones that fail. So it's imperative that just keep it nice and simple, and you shall be profitable. Okay. Have a great day, and I'll see you first thing tomorrow morning. Until then, trade serenely.